But EBITDA is the exact opposite. You want to show that you made more versus, like, for tax purposes, less. So you're paying less income taxes. So that's kind of how I explain EBITDA to people is you want to be able to provide and show what you guys made. And it goes back to the documentation of everything. With EBITDA, a lot of people don't realize this, they're add backs. They're stuff that you would have taken out for tax purposes, but when you're going to sell, you can add them back so that your bottom line is higher, which is a good thing.
Yeah, so we were talking offline yesterday, and one of the things that really stood out to me was you talking about how you have clients that look at their bank account every single day, and that's almost like their measure of how much cash they have. Which, sure, that's a number that's in a bank account, but you had some tremendous insight on that. Can you talk to us about what that truly looks like? Is that the amount of cash they have? Give us some color there.
Yeah, so great that people are looking at their bank accounts every single day. That's awesome, but it's not going to give you a true representation of how your business is doing because you have a lot of moving parts in your business. So, that's not going to take into account, maybe did you like manually send a check to somebody that hasn't been deposited yet? Payroll, you have payroll coming up. Don't forget about your payroll taxes, not just the direct deposits, loan payments, stuff like that. That's constantly like coming out of your account, but you might not necessarily see it on that given day and time that you're looking at your bank. So cool, it says that you have $30,000, but you also have payroll at the end of the week that, let's say it runs you 20,000. Okay, now you're down to 10. Oh, and you had to pay some invoices. That's another 5,000. So yes, it gives you a representation of how much money you have in the account at that very specific moment, but it's not going to tell you how much you're going to have at the end of the week. And so a lot of people go out and they see these numbers and they're like, oh, I can afford this new laser. I can afford that. But they haven't accounted for their expenses that they've already incurred, and they just haven't necessarily hit their account yet.
Yeah, I'm glad you brought it up. I mean, I definitely, I'm a preacher of habit. I look at my bank account every single day. I look at my investments every single day. I like to see where things are in terms of cash balance, things that are coming in, things that are going out. But I think, if I'm hearing you correctly, and I completely agree, if you're not measuring this on a QuickBooks environment, some sort of, financial tool, if you're not logging the information, if you're not predicting the expenses based upon the cash that you have in, like they could put themselves in a very vulnerable situation, right? So what are some of the best practices? Because if you have future wires going out, you wrote a check, you may have forgot that it's going to clear in a few days. And if you're just thinking that your bank account balance is like a measure of how you're doing, what are some best practices for these practice owners to be looking for to make sure they're not put in a vulnerable situation?
Yeah, so this is where your accounting software is really going to come into play. And I believe in, entering all the invoices that you're going to be paying, whether it's, a wire transfer, credit card, cash, check, anything like that. You need to enter that into your accounting software because that's going to actually show you, here's the cash that you're going to have in the bank. Even though it hasn't necessarily cleared your account yet, you're going to see, oh my gosh, my account, the bank balance is up top, but then your true, cash that you're going to have available is below. For QuickBooks, for instance, it does a great job of, showing you, okay, here's what your bank balance is, but on the bottom, here's kind of all of your expenses that you have going out that haven't necessarily hit your account yet. So it's the due diligence of entering all of those in. Is it time consuming? Yes, but it's going to help you track your cash a lot better. And two, it's going to help you for paying those bills to be like, you know what, this week we're going to have to kind of push it off. We can't pay this invoice because we have payroll coming out. We can't not push payroll. So it's a lot of, looking at your numbers on a regular basis to see like what is going on.
Yeah, so there you guys have it, right? If you are continuously looking at your bank account and that's a measure of success, it's going to be important to make sure that you have either a systematic solution that tracks the finances. So, cash going in, cash going out, cash on hand, cash flow. And if you're not, utilizing an expert when it comes to bookkeeping, when it comes to logging your cost of goods, when it comes to understanding what your payroll costs are, it's probably time to start investing in that specific category, right? To bring that service provider into your team. I talk to practice owners all the time, and I'm always, hearing that we're doing great. Our numbers are great. We're continuing to grow, and the top line revenue is going up. The top line revenue is going up. In fact, I was talking to a practice owner this morning, and she says she's doing $150,000 a year, or sorry, $150,000 a month in top line revenue, which it sounds like an attractive business. And I didn't get into like too much of the meat of what the net income was. The conversation wasn't really like on the financials. I was just curious how her top line growth was. But I hear that all the time, and it's if you don't have an attractive EBITDA and the net income, that's the important number, guys. Because what I want to transition into with Stephanie on the line here is truly the importance of EBITDA. And we don't need to get into the acronyms. You guys can go look that up. But it's true. It's the net income. It's the bottom line income, right? It truly is. And that's what makes a practice valuable. Medical aesthetics and wellness practices trade. And what I mean by trade is transact. They sell, right? They sell to a strategic buyer. They sell to a private equity firm. They sell to a partner, whatever it is, or you don't sell, whatever. But when you do sell, this is not a software company. See, software, SaaS-based, fintech companies, AI, all this stuff, those trade or transact on top line revenue, and there's a multiplier. Your service-based business, which is a very attractive business, that's why you hear private equity moving into this arena so much and so quickly, even though they still own a very small fraction of the market, they are trading on EBITDA. And the higher your EBITDA, the higher your net income, the higher the multiplier is, right? It's more of a sustainable, less risky type of asset that they're looking to acquire. And the purpose and the reason why I wanted to go there is because Stephanie has a tremendous amount of insight on how you can get your P&L and your balance sheet to look extremely attractive and have best practices and best providers to know exactly what that P&L should look like. So when you do transact, you can transact for the highest valuation. So can you talk to us a little bit about that of hey, these providers and practice owners may look at hiring a bookkeeper as an annoyance or an expense. I look at it as somebody that saves you time and money, but also creates a multiplier effect of valuation, like truly big material money when you think of it through those eyes.
Yeah. So as business owners, you always are hearing, my taxable income, how can I lower that? But EBITDA is the exact opposite. You want to show that you made more versus like for tax purposes, less. So you're paying less income taxes. So that's kind of how I explain EBITDA to people is you want to be able to provide and show what you guys made. And it goes back to the documentation of everything. So, with EBITDA, a lot of people don't realize this, they're add backs. There's stuff that you would have taken out for tax purposes, but when you're going to sell, you can add them back so that your bottom line is higher, which is a good thing because you want to make more money. So for instance, something would be owner's salary. A lot of people don't track that correctly. And so if you're not breaking it out by your payroll provider, admin, owner's compensation, stuff like that, if you don't track it accurately, it's going to be hard to, not fight it, but justify adding it back into your profit and loss when you're going to sell. Because a lot of these private equity companies, this is what they do all day, every day. They have people who are just going through your books with a fine tooth comb to look at every single transaction. And so as long as you have stuff documented correctly, it's going to be easy to justify adding those expenses back into your P&L to, at the end of the day, increase your bottom line. And a lot of people are like, oh, is it really worth it? No, it is. So if you're selling at 5X, okay, let's make it easy. Your bottom line is $1 million, 10% add backs. That's $100,000. Let's say it's 5X. That's $500,000 you can add back to like your sale price, essentially. At the end of the day, does 5 million versus 5.5 sound a little bit more attractive? Yeah, all day, every day. $500,000. That's a lot of money. But again, it goes back to making sure, because you can't be like, oh yeah, this is usually how I would pay, or I would have paid myself, so let's add it back. No, that's not gonna fly. You need to have it documented so that it's easy to justify those expenses.
I love this part of the conversation because it's so critical for practice owners and business owners to know that these ad backs, they become very material, right? And if you look at the numbers she just said, if you have $1 million in net income and 10% of that is ad backs, that's 100 grand. And if you transact for 5X, it's 500,000. Well, let's say your EBITDA is, your net income is 3 million. Okay. And you have 15% of ad backs or 20% of ad backs, right? That's going to be a much more material number because your multiplier on that could be 7 to 8X. So in that formula, I won't do the math, but you're probably over $1 million in extra cash that could come into the practice. And, when you think about it, like what Stephanie just said, a $5 million versus a $5.5 million number, at the end of the day, maybe you say, who cares? But there's this thing called winning in the margins, right? And I think when a lot of people will ask for discounts on lower base services or treatments that they're acquiring, right? Have you ever hired like a plumber or an electrician or your house cleaner or your lawn person or whatever? And you're like, hey, could you do it for X, right? I'm always the type of person that's trying to negotiate. I think that most of the listeners are too. I'm always trying to get a deal. And you're like, hey, I saved $100 here on my bill with my, maintenance person, whatever it is. And you think you won, right? Because you're looking at it through that discount of cash coming back in, and in your mind, you won that extra money. But when you're talking about big money, it's almost like we lose sight of it because you're so focused on the big money. And the big money is where you lose a tremendous amount of losing or winning in the margins of $500,000 in this case. And, like put the $5 million aside and just put 500 grand on the table. Okay. Go take $500,000 and go put it on your kitchen table in cash. And you tell me if you want that cash or not. And really it just comes down to correction of data in your P&L, and the private equity team, they will pay you for it. They will write the check, right? They will, because it's all just a mathematical equation for them.
Exactly. Yeah. I mean, again, they see the value in what you're doing and the business that you've created. So why not get your worth? Like, you have put time and energy into this business to grow what it is. You deserve to be paid what it's worth. But again, it goes back to, having all of your ducks in a row, because these guys are going to come in a guns and blazing. They're not going to be like, oh, do you have any ad backs? They're not going to question that. Why would they? You have to be that negotiator. You have to take charge and have the confidence in saying, hey, here was my owner's compensation. Here's, these improvements, these one-off improvements that we have done to our location, our property, that, you don't ever have to pay again, but we would like to be compensated for that. So, again, it goes back to just making sure that you have accurate information to, stand up to these guys and get the money that you deserve.
Yeah, I guess it's like before you go and transact or sell, maybe the year prior, you want to offset your ordinary income by accelerating some payments, right? Maybe you pay all your software vendors a monthly fee. And at the end of the year, you want to lower your tax rate or your bracket. Maybe it's a good idea to go pay all the services up front and get the annual discount anyway. And you kind of want to reduce that ordinary income to reduce your tax exposure,
Yep.
right? But when you're looking to sell, you have to think the opposite, right? You want to keep your net income as high as you can because that's where you transact at the highest valuation.
Exactly. And I think that's just like not hard, it's just a confusing way of thinking when it comes to business because we're all taught how do you lower your taxable income? That's all everybody ever talks about. Let's have like, we don't pay taxes. How can we lower our bill? But when it comes to selling, it's the polar opposite. So you have to stay on top of it.
There you guys have it. I appreciate having you on. It's been great. I appreciate the conversation and you doing everything that you can for practice owners. And this is such an area of expertise that is very, very needed, right? So guys, if you are not engaging with a bookkeeper, a financier, somebody that knows numbers, not just knows numbers as a generic type of, way to say it, but knows the medical aesthetics numbers, what providers make, what your margins are, how much a laser costs, how much a treatment costs, what are utilization rates, like how to actually have a templated solution for a P&L that's set up for your practice. If you're not doing that, or if you're trying to kind of makeshift your own P&L or run your own thing, now is a time to truly engage with experts. This is an area that you need to take extremely serious. You can make a tremendous amount of cash. You can also make so many mistakes. I mean, we could talk for hours more on the mistakes. I'm sure, like, if you bring someone in, you probably have to undo a lot of things and then kind of redo.
Yeah. Yeah, there's a lot of that, but that's okay. I'm like, you
It's okay.
tried, but let me
Hmm.
just take it over.
Yeah, yeah, and you'll save yourself a ton of time. Like, focus on your craft, focus on what makes you better, engage with those patients. It's time to start running your practice like a CEO. I want to see every provider out there take just that next step, that next charge forward on thinking more like a CEO of your practice. You own your domain, you focus on your area of expertise, and start to delegate. It's okay. It will give you more peace of mind. It will, give you more clarity. It will give you more time, and you guys sell time, and that's the most valuable asset we have. And so, Stephanie, I know you're super busy, and we'll leave it at that. If people want to connect with you, find you, what's the best resource and place for them to go?
Yes, they can find me on socials. So at Harper and Faye Financial, and then on my website, harperandfayfinancial.com. You can schedule a meeting with me, free consultations. I just want to get to know you and your business and see where I can help.
Awesome. Thank you so much for being on, and thank you so much for your time. There
Yes,
you guys
thank
have it.
you.
Please reach out to her, and if you guys have any, comments, or you guys really enjoyed this episode, my only ask is you share it. Just share it with your friends, family, colleagues. Everybody can learn something from this conversation. Our entire purpose is just to give back and help elevate wherever you're at within your practice. So, thank you guys so much. Have a great day. Until next time, happy injecting.